Are you struggling to spot liquidity in the market, or you often find yourself being used as liquidity in the market? So if you often find yourself or you are struggling to spot liquidity in the market, this video is for you. Stick around to the end of this video because I will be showing you how to spot liquidity and how to avoid being liquidity in the market. So let's take a look at the chart. Okay, so if you are new to this channel, please consider subscribing. Okay, so before we take a look at the chart, if you are new to this channel, please consider subscribing, like and share the video. Leave a comment on what you want us to cover next. So now let's take a look at this. So first of all, before you spot liquidity, or before you identify liquidity, or before you avoid being liquidity, first of all you must know what liquidity is. So basically liquidity is just a point in the market where there are many stops, right? So it helps the market to move. So liquidity help moves the market. Liquidity moves the market. When liquidity is taken, the market has volatility to move in one direction or the other. So now, how do you avoid liquidity? First, you need to identify where the liquidity is. You need to identify where traders are keep putting their stop losses, where retail traders are putting their stop losses. You need to identify where banks will be interested in entering the market. So this liquidity might come in different forms, right? So we have the previous session highs, previous session lows, we have trend lines, we have support and resistance, we have equal highs, equal lows, we also have previous daily highs, previous daily lows, we have previous weekly lows or previous weekly highs. So it goes on and on. We also have this type of liquidity where many people are not aware of, right? So for example, right, we have this liquidity, we have this chart on our screen here, right? You can see that we have a break of structure here. You have a value break of structure here because price took out our inducement, right? So after price took out our inducement, price created this break of structure here, right? Because this break of structure, this is a body break. So now this is a value break of structure. So now this is our highest, this is our lower high, this is our strong high in this case. So now people are looking to sell here, right? People are looking to sell here. Now, what you can see is, first of all, this trade we took here, it sold off, right? But never failed to break this structure. Then price came above here, right? And did not close above with a candle. Did not close above this our zone here with a candle. So this is a form of liquidity grab. So if let's say you are in this trade, right, and you are monitoring price when price is coming back up here, what you need to take into account is, if price comes up here, right, and happens that the candle has not closed above this zone yet, your trade is still valid. If this zone is broken and the candle has not closed above the zone, so if this candle pushed above this zone, you must wait for it to close so that you know if you have been this is a change of character or this is a liquidity sweep. So you should take into consideration previous highs, and the way the candles behave there, right? So let's go to another example of a liquidity grab, or another example on how to spot liquidity. So okay, right. So in this example here, we have equal lows, right? So we have this resistance zone here. We have this zone here, which created these equal lows. Okay, this zone created these equal lows, right? So as you know, what retail traders are looking for is, so when this market bounce off this zone and comes back to retest this zone, these retail traders are looking for, okay, they are like, okay, this is probably a strong zone that we should be looking for our buys, right? So now after market, they buy off here, pushing prices up. Then when prices come back to retest the zone here, they're still looking for other buyers because normally in retail concept we are taught that the longer or the more price retests a zone, the stronger the zone is, right? So now when price retests here again, they are looking for another buy. So it actually rallies up a few pips, then pushing down and retesting again, right? So now they will be adding more positions and putting their stop loss somewhere below here, right? Because this is the resistance zone here. They will be putting their stop loss somewhere below here. So now what you see here is there's this aggressive candle now. There's this aggressive candle that just comes below this zone, weeks below this zone, and finally prices rally up here. So now this is known as a liquidity grab because why is this liquidity grab necessary here? This liquidity grab is necessary here because this zone, people were buying at this zone and putting their stop loss here. So normally the market is programmed to push below this zone, collect all these stop losses before rallying up. And when it rallies up, right, when it rallies up now, these people that were buyers here now sees that no, all their liquidities have been taken, all their liquidity have been taken. So after this liquidity sweep here, what these people that are buying here they see is okay, now the zone has been broken, right? So they sell here during this liquidity sweep, they sell, and what they're waiting for is for price to continue down. So instead, now this acts as a liquidity grab, and when they sell here, they put their stop loss somewhere just above here. So now after this liquidity grab, price manipulates and push back up, collecting those other stops for those people that were already selling below this zone here. And finally, when price has collected the stop loss, it drops massively down. So this type of liquidity is known as relative equal lows. You can get another example. The opposite of this is relative equal high. So that's a type of liquidity, right? So let's go to another example. I will show you clearly in another example. So okay, now what you can see here, this example will be on trend line liquidity, right? So what you can see from here is there's this trend line here, right? Starting from this low here, we can draw our trend line through here, right? So now this is our first touch, this is our second touch, and this is our third touch, right? So now after this third touch here, this is where people are looking to buy after this zone here. Then now when they're buying here, they're putting their stop loss below here. They're putting their stop loss below this trend line. So now when you buy here, you put your stop loss below this trend line. What happens is you see that after price push off for a few pips, they're adding more position and price pushes up. So what happens now is price just breaks the trend line here because normally if price is somewhere here and you're expecting a retest, you'll be expecting it to be here according to the trend line theory, and your stop loss will just be below the trend line. So now as price pushes up here, price rallies down, taking out all these positions here, right? As it takes out all these positions, these people that were buying at the trend line now, they start looking at the trend line, they start seeing that the trend line is broken, right? So they're looking for sell. Some people sell here, the aggressive traders will sell here, but the more patient traders will wait for a retest. So those aggressive traders that sell here, they put their stop loss maybe probably somewhere around here, and price just immediately goes back up, sweeps the stop loss, and immediately drops down. So this form of liquidity here is known as trendline liquidity. So I'll show you. Let me go to session highs and session lows, right? So that I will show you the form of liquidity. Then I can show you weekly highs on gold. And yeah, let's take a look at that. Okay, guys. So I was setting up this session indicator here, right? So now that the session indicator is up, now we can take a look at that. So now right. So we have we have these sessions here, right? You can see that this session here opens here, this session here opened here, push prices right down. So now when the next session open, what happened is this session, when this session open here, many people that trade this session were selling here, and targeting, and their stop loss was above where this session opens. So when the next session opens now, what happens is there's a manipulation, right? So this manipulations pushes above this session side to clear the liquidity and kick out the traders that sold during this session before. It manipulates lower and takes out the traders that bought during this session. So you can see here, this is another example. What happened here is when this session opened, push down here, people bought here, there was liquidity below here. So now what happens with the next session is when the next session open, it wicked down massively and created and took out the traders that bought during this session, and finally it bought up, taking out the highs of this session. So the people that bought and sold within this session were treated as liquidity. So now you might be asking, how will this benefit me in the market, right? So now for people that trade the ICT silver bullet, what happens is when price normally does this, what you are looking for is for something like a single candlestick order block. You can look at my previous videos. uh I've shown the single candlestick order blocks there, right? So now when this liquidity sweep happens, you look for those single candlestick order blocks and you look for an entry. You look for an entry to the opposite direction if you are somebody that trades the ICT silver bullet, or you can wait for a change of characters and then you look for an entry in the opposite direction. So let's go to, I think what is left is daily highs or daily lows or weekly lows. So we'll take an example on gold here. So okay guys, so let's continue. So from what you can see here is, here we have this weekly high here, right? You have this weekly high here. So many people trade this, they treat this weekly high as a resistance zone, right? So now what happened is, if you treat this zone as a resistance zone, you are treating this as a support zone. You are treating this zone down here as a support zone, right? Now what retail traders are looking for is, when price goes to this zone we sell, and when price comes to this zone we buy, right? Now this weekly high here was retested here, and when it was retested, many people sold because they believe that the higher time frames are stronger structures, which is actually correct. And and when it came down to this resistance zone, people bought. So now it came up here and people sold, right? People sold massively. And many people that sold, they were aiming for this zone here. This is where their profit targets were, and their stop losses were just above this zone. So what happened is, after price pushed down here, price intentionally came above this zone, wicked through. Remember, this week is very important, because when you see that price wicks above a zone, that is a liquidity grab. If it was that price close above this zone with a candlestick, now that could have been considered a break, right? Now, when price wicks above this zone, what are we looking for in gold now? We are looking for prices to potentially drop, or for prices to induce sellers here, right? When they induce the sellers, they can drop a little and then continue up. So now, that is how to spot in liquidity. This form of liquidity is known as weekly highs, or previous weekly highs, or previous weekly lows. So you need to be careful where you buy and where you sell to avoid being liquidity. So for to be on the safe side, avoid selling somewhere around the resistance or support, or if you are supposed to sell there, you can wait for prices to take out the liquidity, like in this case, right? And you then, before you look for your uh entry, or if you want to buy, you can wait for price to take out the liquidity, something of this sort, before you can look for your entry, right? So stay safe guys. If you are new to this channel, please subscribe, support a small YouTuber, and I'll bring you more content like this in the future. Thanks for watching. God bless you all. Have a profitable year. Happy New Year to you guys. I'll see you in the next video.